The $8 versus Indian rupee is reaching new highs, new lows for the Indian rupee. I'll talk about the technicals driving this currency pair. Yes, you could apply the same technicals I use in my other charts in this chart, and I'll show you. So let's get started. Looking at the hourly chart, what we do in many other charts, what you can notice here from a technical perspective is this trend line. This trend line connects recent highs through here, and that trend line cuts across up here near the 90.10 level. So if we were to just look at this chart, we're making new all-time highs. Remember, there's nothing ahead. There's nothing to grasp onto, but you can grasp onto this upside, this trend line on the top side, that as a potential risk level. If the price were to move up that level, you could see sellers lean against that level and try to force the price back to the downside. In other words, try to pick a top. Alternatively, if you are a buyer, you want to see the price move above that level. And if it moves above that level, it adds to the bullish sentiment and pushes the price to the upside. Now, off this chart, you can also see a clear risk level, and a clear short-term risk level would be this level right here. This level reached a high here, and it rotated to the downside. We moved above that level through here, and what do? We based against the level right here and pushed to the upside. So at the 89.79 level, if the price were to go below that level, that would be a tilt or a win for the sellers. Getting back below an old high, which was support, is a bearish move to the downside. Below that, you look toward the 100-hour moving average. That's a blue line in this chart, and that's moving to the upside. So as the price were to break below that level, it would become an easier hurdle to get below that blue line. Note here that the price found early buyers against the blue line here, found early buyers against the blue line here. We did move below the blue line here, the 100-hour moving average, but failed fairly quickly, and that gave the buyers the go-ahead to push to the upside, and they did. Back here, we based against the 100-hour moving average and the 200-hour moving average here after breaking above it here, and that gave the buyers the go-ahead to push to the upside here as well. So the 100-hour moving average and 200-hour moving average have a play in your technical picture as well. If the price were to move below those levels, then you would expect to see lower prices as a result. Now let's take a look at the daily chart and see if we can make sense off of the daily chart. And what you see on the daily chart, I'm going to reset this and push back here, is that the price once again is breaking to new all-time highs. This is a new all-time high. But if you go back in time and you take a look at the last corrective move here and put it at what is called a Fibonacci extension on that, this measures 100 or over 100% corrections of this move and tries to anticipate levels of interest for traders to try to pick a top or a level that they can lean against. And there are certain Fibonacci extensions that they use. 127.20 is one, 161.8 is another. And what this is basically 127% of this move to the downside targets this level right here. 161% of this move to the downside targets up here. And so you can see that the price is above the 127.2 level right through here. The next key target on the top side would be the 161.8% level right here. So that would be another key target on the top side if the momentum would continue. Now, another thing that you can do off this daily chart is you can draw some trend lines and some channel trend lines. More specifically, if let's say I put a trend line across here that connects this low to these lows right through here to this low right here. Nice defined trend line. We actually bounced off of that trend line right through here, moving to the upside. Now, if I were to go and clone this line and create a parallel line to that, and just put it against the highs right through here, you can see that we have it lines up really nicely with this high right here, lines up with this high right here, lines up with this high right here. We fell short of it here, and we're not really close to it level right here. But note up here where this target level, this line comes in, this parallel channel trend line comes in, right near the 161.80 level, Fibonacci extension level. So not only do we have the Fibonacci extension level, but we have the high parallel channel trend line to contend with. So this level right here would be a key target on the top side if the buyers should continue to push this pair to the upside. It's a level that traders can define risk and limit risk against that level. It doesn't mean that it's going to stop there. It could go through there, and if it goes through there, that's more bullish. But if the price were to move up to that level, I would expect some sellers against that level that may push the price up back to the downside. We'll see. But that's what trading is about. That's what technical analysis is about, trying to find those levels that traders can lean against. So that's my technical view at the US dollar versus the Indian rupee. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.